Hey, what's up, stock compounders? Brad here. So the market is getting a little wonky again, right? And what I'm seeing with these big YouTubers in the investing space is headlines like, why the stock market just dropped, do this now, get out. I'm selling all of my stocks. There's a stock market crash coming. So when you guys see these things, all right, I want to share what I see when I see these things. I see, people who are trying to hype what's happening in the market, right? They're trying to elicit some kind of emotion to get you to do what they want you to do, which is to click through to their video. They want you to feel some fear, right? They even have the red background, right? That's what happens when you see a stock price going down. It shows up in red, right? It's scary. So, one of the reasons Warren Buffett lives in Nebraska, lives in Omaha, is because he discovered early on that there's so much noise on Wall Street. Noise that has nothing to do with being a good investor, with making intelligent investment decisions. And now we've got, all of these popular investing YouTubers to bring all of that noise right into our own homes. And so, I want to share my 2 cents on what it means when the stock market is going down. Usually when someone says the stock market is crashing, prices plummeted today, usually it means they went down like 2, 3, 4%. And they're really just grasping at something to hype, right? Occasionally stocks go down 10% in one day. That was happening in March of this year, and that's significant. But I want to share my thoughts when stock prices are going down. I wish it was easier to flip the psychology on its head. When I see prices going down, because I invest in a way where I have a sense of what the business is worth, prices don't mean much to me. Prices, the prices that Mr. Market is throwing out every minute that the market is open, those prices don't influence how I feel about the company, okay? Mr. Market is a manic depressive. That's what Benjamin Graham used as an analogy for Mr. Market, which is a fantastic analogy. In the short term, the market can be all over the place for no rational reasons. The market can be very emotional, euphoric when prices go up really fast. Look at what happened with Tesla in the last year and a half, or really depressed, okay? I don't want to have anything to do with this company. So, and that can be with the same company. I mean, you can look at Apple, the price history, the market cap of Apple over the last, say, 3 years, maybe 4 years now. Nobody wanted Apple, maybe 3 or 4 years ago. It was on the magic formula stock list. Nobody wanted it, which means, being on the magic formula stock list, it was a great business. It had a great return on invested capital, and it had a really high earnings yield. You could earn a lot of money for the dollars you were putting into it back then. So it's weird when you have a great business and it's cheap, right? But that was the case with Apple 3 or 4 years ago. And now you look at Apple, and people want it at any price. So that's what Mr. Market does in the short term. It's not rational. They're not carefully calculated prices in the short term. So I thought about there's really 2 ways to kind of think about stock prices. Okay, the first way is you're trying to predict the near-term movements of prices. And that's really the whole idea behind trading, right? Moving in and out of stocks in a very short time frame. And, when it comes to making money, over the long term, it's, I know very few people who have managed to make a lot of money over the long term by trading, okay? Trying to predict these short-term price fluctuations. And it's really taxing psychologically and emotionally. It can be really hard to sleep at night if you're betting on these short-term price movements. So that's not my game. And, for the whole value investing community, that's not our game. It's very difficult and not very fun to play that game over the long term. So the game I play is acting based on what has already happened, okay? So rather than, I own a company, the price goes down, rather than stressing out about it, rather than looking at that price movement as, some market wisdom that, that was probably a bad investment, because the price went down. It means I shouldn't have bought it. It must not be a good investment. Rather than looking at it that way, looking at price fluctuations, like Warren Buffett talks about hamburgers, he's going to be buying hamburgers for the rest of his life, okay? When the price of hamburgers goes down, how do you think Warren Buffett feels about that? He is very happy when the price of hamburgers goes down because he's going to buy hamburgers regardless of the price. So if they're cheaper, that's great. He saves money and he can put more money into his investments. If it gets more expensive, he's upset about that because, now he has to spend more as a percentage of his income on eating hamburgers, buying hamburgers. And it's really the same way with stocks. When you look at them as a partial ownership stake in a business, when the price is going down of a business, you can buy more of the business for the same amount of money, or you can buy the same amount of business for less money. You're getting more for what you're paying out, okay? And that's awesome in investing, because really the goal of investing is to put out $1 today and get $2 back a couple of years from now. That is a fantastic return on investment. If I put out $1 today and I get $2 back in 3 years, I'm making 26% per year on my money. So that's really the goal. So if I own a business, and I own it because I like it, because I see that there's a margin of safety there, I can buy ownership in the business for less than the value that I'm getting in the business. If the price is going down, I can buy more of the business for my same dollar than I could yesterday or a week ago or a month ago. That is a fantastic situation. I am going to get to my goal, my financial goals, faster if I can do that, if I can buy more of a business with the same dollar bill tomorrow. So for anyone who is going to be buying stocks, in the near future, for any net buyers of stocks, if you're before retirement age, basically, we're happy when the price goes down because we get more for less. And that's really the way as a long-term investor to look at price fluctuations. And it's acting based on what has already happened. I don't have to predict anything, which is great because it's so hard to make accurate predictions in the stock market. All I have to do is understand the value of a business today. If the price is significantly discounted from that value, I am happy to buy ownership interest in that company. And if it goes down, I am even happier to buy an ownership stake in that company. So, the market is not very good at pricing stocks in the short term, okay? It tends to be good about pricing stocks in the long term, maybe 2, 3, 5 year time frame, but tends to get it pretty accurate over multiple years. But tomorrow, from today to tomorrow, there's not a whole lot of wisdom in the price action of stocks. That's my perspective, and Benjamin Graham's perspective, and Warren Buffett's perspective. So that's really what I wanted to drill into my head and drill into your head today. Is it's so easy to get swept up in the emotions of the market has gone up a lot, I'm missing out. The market just went down a bunch, I am going to get creamed unless I sell out of everything. Those are the exact mentalities that will keep you in the poorhouse. You cannot do well as a long-term investor if you allow those emotions to guide your decision making. Okay? And I see it on the thumbnails, the videos from these popular YouTubers. It's the same thing we're bombarded with by the media and analysts. It's amazing to me when a company has been going up for a while, analysts will actually tweak their numbers to justify a higher value for companies. Okay? Just keep an eye on this. As the price of Apple goes up and up and up and up, the market cap goes up and up and up and up, analysts, it's almost like they get more excited about the company. There are more buy recommendations than there ever have been. And the thing about that, analysts aren't there to help you make rational decisions with your investments. Okay? You've got to understand who's paying the analysts' salaries. Okay? What motivates them financially. And if you understand that, you understand why they make the buy and sell and hold recommendations that they do. They're doing it because there's incentives there to do that. So that's really important to understand. That's why we really have to do our own homework. Don't listen to analysts, especially for growth rates, numbers that are so important in a discounted cash flow valuation model. We need to come up with our own rational idea about what is a reasonable growth rate for this company. Don't just take analysts' numbers blindly, because you guys, there's a lot motivating those outputs, those numbers from analysts that have nothing to do with us making rational, good investment decisions. So I just wanted to share these things. It's frustrating to see, the hype. I understand it gets clicks, and that's why these big YouTubers do it. But it really just perpetuates patterns that crush our ability to do well in the long term as investors, especially picking stocks, investing in individual stocks. So I hope, over time, I hope to really get this message out, that there's really another way to look at it, a way that is much more rational and helpful and will keep the portfolio compounding over time rather than really hinder our gains over time. So let me know what you guys think of that. I'm curious to hear from you. And let's keep these big YouTubers honest. If you see this clickbait stuff, if you see, them kind of pushing these fear messages when markets, short-term price fluctuations have these big moves or even small moves, let them know. Let them know that it's not cool. Let them know that it's not doing them any service. Keep them honest. That's, we have a lot of voice out here in YouTube to do that, to influence what kind of content these creators are putting out. So do your part. Help the whole community be more rational and stay sane out there. It's we're coming into potentially turbulent times, and it's important to have the mindset that helps us do well through it. So Just wanted to share this. Hope this helps. And I'll see you guys in the next video. Take care.